Welcome to the April 2021 WSBA Accounting Working Group podcast. I'm your host, Dr. Stein Smith, and today I'm thrilled to be joined with David Siegel, who is a senior assurance manager at Aprio. And so I'm going to toss it to him now for a brief introduction of himself, his team, and his firm. David?
Thanks, Dr. Sean. Yes, thank you. My name is David Siegel. I am one of the leaders of our crypto and blockchain practice at Aprio. Aprio is a top 50 CPA-led advisory firm. We have about 800 people across the country. We've been working with crypto companies since 2013. We think we've done one of the first blockchain audit, and we've also done SOC reporting for crypto companies as well. So we think we know the industry very well, and we're happy to take part today in this podcast.
Awesome, David. And so before we get into the main topic, are there any big trends, big pivots that you and your team have actually seen in terms of institutions trying to use blockchain, trying to use crypto, and more specifically, are there any major obstacles that are still keeping firms out of doing so?
That's a great question. And we are starting to see a larger uptick in kind of the volume of activity. I think that crypto is trading so high and the price is going up and people kind of seeing the amount of money being made in the space has definitely attracted additional attention from people that really weren't interested before. I mean, we've talked to private equity groups that have traditionally focused on your typical FinTech companies, and they've started to want to learn a little bit more about blockchain. You read in the news all the time about these big banks and their kind of involvement in blockchain, but the clients that we serve are a little bit downstream from your JP Morgans and your Bank of Americas. They're more along the lines of founder-run and founder-led enterprises to some kind of small and medium businesses. And for those, I mean, a lot of people want to talk to us about blockchain. I think certain industries are looking into it deeper than others. But I think it's definitely a trend that's piqued everyone's attention recently.
I would say so, right?
Yeah. I mean, and then on the crypto side, I mean, we see a lot of interest in DeFi. I mean, DeFi seems to be the buzzword of the year. And so a lot of companies are not just looking at your traditional. I mean, we're seeing a lot of DeFi in the marketplace as well right now, and how traditional blockchain companies can go into the DeFi space.
Interesting stuff. And there has been some hubbub and some talking about this one cryptocurrency company. I think it's called Coinbase. Aren't they going public sometime soon?
So I hear. Yeah. So obviously, this is the big news that everyone's been waiting for. I know that all of our clients have kind of been waiting for this. I've been waiting for this. I'm sure a lot of your listeners to your podcast have been waiting a long time, and I think everything is shaping up to deliver when they go public. And I think that it's going to be a big splash. I mean, this is going to be one of, if not the biggest IPO of 2021. It's definitely going to get the headlines and warranted.
Yes, and I know that they had posted their first quarter earnings back in early April, and they, posted outstanding income numbers, earnings figures, margins, customers. But I do know you've also gone through their S-1 filing, and so I was really interested in, was there anything in there that had sort of popped out to you as either interesting, good, bad, or just a item that you were not looking for?
Yeah, I mean, I think that there was a lot in there. I mean, we were all looking, kind of practitioners in the industry, we're looking for this S1, because this is really going to be the one company that kind of goes public and sets a little bit of precedent for how certain items are accounted for. But before I even got into the accounting, I mean, I was just blown away by the numbers. And you mentioned the quarter one results. I mean, those were, I mean, I had a buddy who texted me and said that I've been going back and forth on kind of debating on what Coinbase was going to debut at. And I threw out a pretty big number, I thought. And my buddy was like, there's no way they're going to hit that number. And then the first quarter results came out and he texted me. He's like, I think you were onto something. I mean, their growth they're seeing is absolutely ridiculous. I mean, they did more revenue in the first 3 months of 2021 than they did in all of 2020 and 2019 combined. I mean, the hockey stick they're on is clearly delivering at this point. And their share of the market is pretty impressive. I mean, I think on their S1 filing, they had about $90 billion of assets on their platform. That was as of December 31st, which is not insignificant. But as of the end of March, they had $223 billion of assets on their platform. So in a 3 month, I mean, granted, a lot of that is due to the increase in the value of cryptos. I mean, Bitcoin moving from basically not quite doubling it in that time period. I mean, that helped, but even if it had doubled, I mean, 90 billion to 223 means that they also saw an increase of market share as well. And I believe they were at 11.3% of the market as of the end of March is what they claimed, which is pretty impressive. And actually, it's very impressive. I mean, you don't see any traditional bank in the country with an 11% market share or any other kind of financial institution with that large of market share. But it does still show that there is a huge there's a huge spread in the market. I mean, they're the biggest name. They're going to be the star of the show, but they still have only about 11% of the market.
No, and so, I mean, I think really does point out and I think highlight just how much opportunity is still out there, right? For Coinbase or for any crypto trading platform. I had heard on April 8th or in the evening coming into April 8th that actually Kraken was now considering going public also. So to your point, though, I do think that Coinbase is going to set some of that precedent for how things are shown, how things are put out to the marketplace. So if I had to ask you one sort of pertinent piece of information from that accounting point of view, right, from that practitioner angle included in that S1, are there any points, 1-2 points that sort of pop out to you as items that can help sort of answer some of the open items, try to outline some of the ways in which other companies can have that data published in the future?
Yeah, so I think one of the things that kind of immediately stood out to me was how they accounted for stablecoins. So stablecoins are still crypto assets, and they accounted for them not as a traditional crypto asset. They really treated them as a separate asset class. They didn't include them in their crypto asset disclosure. They didn't include them on the same line item on their balance sheet as their crypto assets. They treated them as a separate asset class. And I think that was very interesting. I mean, as a practitioner, we've kind of been thinking about that as well. These things are really tied to the US dollar, and potentially supposedly there's FDIC backed currency behind these stable coins in a bank account, which I'm sure there's some controversy out there about that as well. But I mean, so it definitely comes off and it has the appearance of less like a crypto and more like a currency. And the fact that they accounted for them almost like a currency, they obviously did not include them in their currency, but they accounted for them almost like a currency. I thought that was very interesting. And that's definitely, I think, a precedent they set that others will follow.
No, and actually they are able to sort of go out there and set that precedent because, as we all know, there is no crypto specific authoritative guidance out there yet from the FASB. And as I'm sure you and your colleagues have been having conversations on this, it's honestly really is starting to shape up like there are going to be different buckets of different crypto assets, right? And a key sort of driver in there as to how they're going to show up on the balance sheet, income statement, all the rest, is one, how are they built, right? How are they actually put into the marketplace in terms of how are they advertised, and then how they're actually going to be used. So I do think actually sort of having that bifurcation between crypto assets, cash, and then stable coins highlights the importance of trying to get that more codified, and I think is an excellent first step towards that process.
Yeah, I think something else to kind of keep in mind is that there's obviously been some AICPA guidance about accounting for cryptos as intangible assets at cost.
Yep.
But implicitly, the SEC signed off on that accounting because the SEC has to review all S-1 filings, and they Coinbase filed their S-1 using these rules where they can kind of submit, have the SEC review it, and then answer any questions before it gets released to the public. So we really don't know what their initial draft looks like, but the SEC, the fact that the SEC let them release this and it's posted on the SEC website does kind of implicitly say that the SEC agrees that crypto should be treated as intangible assets shown at costs. And I thought that was not something that was surprising at all, but I think that will lead some credence kind of going forward as if anyone tries to challenge that position, I think we now have a precedent being set by the SEC on that.
And I think that answers one sort of underlying question as to whether the SEC will okay this or not, but also I think points out that is that really accurate though, right? Having all of your crypto assets on the balance sheet of a company held at cost. Is that really gonna reflect the economic realities of Bitcoin holdings? I think is a whole other question and a whole other topic. But I would agree that having that even going through the whole process of having to submit this to the SEC, answer any questions, and then have this be basically okayed by them is, I think, an extremely important step going forward.
Yeah, I think this is going to set some precedent. You have some small blockchain companies that are public at this point, but nothing of this magnitude. And so I think that this could pave the way for other companies kind of following this path.
I would say so, yes.
And the Kraken example obviously being one, but there's a lot of money right now in these SPACs, these blank check companies, and you better bet they're going after these crypto companies just like they are everybody else.
Absolutely, and they are, one, going after those firms because it's a hot market, and two, because there is some time constraint, right, on those entities also. They do have to close deals in a certain time frame.
Yeah, absolutely.
Yeah. And to sort of go at this from a alternate angle right now, David, is there anything that you thought would be in there or thought would be included or you were hoping to see that has not been talked about yet, either in the S1 or in their quarterly earnings?
So this isn't really something that I didn't expected that wasn't in there, but it was maybe as a much lower magnitude that I expected. And so when you think about Coinbase and you think about all the things they're doing, they still generate the vast majority of their revenue from transaction fees. So all the staking they're doing, all the lending they're doing, all their other activities, which are kind of hot in the market these days, they're making a little money on it, but not nearly as much as the transaction fees. And the transaction fees are still the main driver of their revenue and their profits. So I was a little, that was a little unexpected. I would have thought that the transaction fees would kind of be their base and the majority of the revenue, but I didn't think it would be as significant as it was. That was a little surprising to me.
So then I have a kind of follow-up question then. So with that context, right, with the vast bulk of their revenues still coming from basically collecting transaction fees, collecting trading fees, basically, is the business of Coinbase right now in terms of actually how they make their bulk of their revenue, is that fundamentally different from how traditional brokerages up until recently had earned money via commissions, fees, all the rest at that base level? And obviously, I know that the whole crypto space is its own animal, but in terms of actually how the firm earns its money, is there a fundamental difference between how Coinbase operates as a trading platform for crypto and how a traditional brokerage operated in the past?
I mean, fundamentally, the revenue streams are very similar. I mean, they are. I mean, it's they're getting a fee for moving an asset between asset classes, just like a stock market exchange would get. And so that, I mean, yeah, fundamentally, I mean, their business is set up with a very similar kind of business model. Not unsurprising. I mean, it's a proven business model, and it's worked really well for a long time and made people a lot of money. And obviously, their fees, their transaction fees are a lot higher than you or me would pay to trade a stock, which is a little crazy. And maybe there will be some compression in the market. I mean, we don't really know, I guess, what percentage of the market share they have in terms of trading fees. We do know they have a lot of institutional users of their system.
Sure.
I believe as of the end of March, they have about half of their assets on platform were held by institutions, which is another very interesting thing out there. And so I would imagine their institutional trading fees are a little bit less than their retail trading fees. And actually, their revenue of their transaction fees, about 95% of it comes from retail. I think part of that could be because the institutional users may not have come online until the fourth quarter of last year in a bulk way, or maybe even the first quarter of this year. So
it's going to be very interesting to, I think, see sort of how that changes in terms of the AUM mix and in terms of actually where the firm gets its trading revenues from. I just feel that it's always good to point out that, for any, non-expert folks tuning in or any individuals who are newer to the space, right? That the operating model of Coinbase isn't some esoteric abstract thing, right? That it's based on a model that all of us at a base level understand.
Yeah, absolutely.
And if I could sort of piggyback off of a comment that you had made, right, about how there is going to be some compression, alteration to how the firm operates, its asset mix, fees, all the rest. I mean, obviously, this event, right, honestly, of Coinbase going public is a huge, I think, watershed moment for the broader crypto asset space. But have you heard anything? Have you put any time into trying to forecast? Are there any bigger picture impacts or developments that having a firm like a Coinbase, so high profile, so well known, and so embedded in the minds of crypto traders, of this firm going public? Are there any sort of bigger picture trends or impacts of this direct listing?
So I guess to start off at the very end of what you said, the interesting thing is they're doing a direct listing. They're not doing an IPO. So that's a little unique. I mean, they're not the first ones to do that by any means, but it does kind of democratize the process a little bit. And so I think that's interesting. I think that could be a trend that we see more and more of, that they're kind of leading. I think that when this thing goes public via the direct listing, I think it could attract some attention from people that maybe not have paid his attention to cryptos as much as we can in the past, and maybe bring more people into the ecosystem, which should hypothetically lead to an increase in trading prices of crypto and further kind of legitimize and bring credence to the system and bring more capital into the system. So I think all that would be good. I think that it could attract competitors. I mean, I think that when people see the margins that they're earning, I think that could lead to other people being like, hey, look, these guys are obviously the first out the gate, and they may have had first mover advantage, and they have a pretty big market share. But hey, if we can take a little bit of their market share and make even half the margin they make, I mean, I don't think that won't cross some people's minds, and that could lead to some compression in Coinbase's fees, and it could lead to kind of compression across the board. Obviously, their fees are no secret. I mean, you go to sign up for an account, they disclose what their fees are, and you can go to other exchanges and see what their fees are. But if someone kind of tries to compete with them on fees, I mean, that could have a macro effect on Coinbase and the greater market as a whole. But I think in all, this is a net positive for the ecosystem. I mean, I think this is going to be, as you said, a watershed moment.
No, and I think you're absolutely right there, David. And I would also sort of point out, or kind of just toss out there, that there are some other actors out there. I think most pertinent to our conversation, Grayscale just actually came out in early April and basically indicated their firm commitment to transforming their current trust product into a ETF product. And I would just point out that if the biggest crypto trading platform in the US is going to be a public entity, then it's going to be awfully hard to actually make an argument as to why there is no crypto or ETF or a Bitcoin ETF product available also.
Yeah, and one of the interesting things I've been following this pretty closely, and so there was they actually Coinbase on their website and their investor relations page posted a Q&A session with their CEO and I believe their CFO, who interestingly enough, someone asked her if she wanted to be the master of coin, which I thought was a pretty clever question. Obviously, I think Tesla changed their CFO's title to master of coin, and Coinbase being Coinbase, it probably would have even made even more sense. She did decline. But one of the things that she said, and I guess they've attracted a lot of attention for, is why don't you sell your stock on Coinbase? I mean, you're an exchange. Why can't you trade your stock? And obviously that's not allowed under current SEC regulations, but they do have like this maybe in the distant future plan of maybe having a crypto asset that kind of mimics their stock price. And that's interesting. I mean, you could see these hybrid instruments that are crypto assets that really mirror regulated securities, and how the SEC will react to that and regulate that could be kind of the next frontier that we face. And so I do see kind of a blending of the crypto world and the regulated SEC world, and at some point they're going to have to intertwine, and maybe this is kind of the first big step of that path.
I certainly hope so. And I think that there are going to be any number of stories, headlines, impacts of this Coinbase direct listing over the next quarter, half year, 12-month period. So it is going to be very, very interesting to watch, both from a sort of markets angle, but also to our earlier points as to sort of what questions get answered, or if not answered, what accounting precedent gets sort of outlined and implicitly okayed by various policymakers. But I do have one last question here for you, David. And I've been trying to ask every single guest this in 2021 so far. So I'm going to put you on the hot seat here with a question. What is your 2021 year-end price target for Bitcoin?
I knew that was coming.
How'd you know? I didn't even tell you.
As I mentioned, I do think that this is going to drive an increase. This direct listing, I think, will increase the prices. Mm-hmm. I think that in the short term, it's going to go up. By the end of the year, I mean, in crypto world, I mean, 9 months is a long time. And,
true.
And actually, even in Coinbase's S-1, they kind of made mention to the fact that they don't really measure their progress on a quarterly basis. They measure their progress on a crypto cycle basis, and how we've had these big dips and ups and downs in the crypto market. And I don't know if there's any, I personally don't know if I have any reason to believe that trend won't continue, that we're going to have these ups and downs, and maybe on a net basis, we go up because there's higher peaks and higher valleys going forward. But I'll make a guess, but who knows if it's right. I mean, I don't think it'll be at 100. I think it'll be less than 100,000. I think I'm going to take a conservative guess and say somewhere around where we are right now. Okay. I think it'll be around around in the 50s. And who knows? I mean, I'm sure I'll be wrong, but that's what I'm going to guess.
All right. So we have a price target, $50,000 to $60,000 range for a coin. All right, I'm going to hold you to that, David.
I'm sure I'll be wrong, and I hope I'm way wrong, but I hope I'm way wrong on the underside. So,
all right, excellent. David, thank you again so much for joining us on the April 2021 AWG podcast.